Hello everyone, and great to have your company here on 𝐾𝐤𝐴 TV. I'm Rachel and you're watching The Buzzing Trends. In today's show we'll be looking at 4 ASX-listed pharmacy stocks. The Australian pharmacy retail market has been witnessing growth lately on the back of increasing number of pharmacists, rising demographics of the ageing population, healthcare challenges, along with a number of insured patients. The growth in the pharmacy retail market was supported by the increasing number of pharmacy services, home deliveries of medications. That's due to the COVID-19 pandemic. It's highlighted the need of providing value-added services and also the presence of online pharmacies across Australia. With the growing online presence and store expansion, major famous pharmacy retailers in the country are generating significant profit. So with this backdrop, let's take a look at 4 ASX-listed pharmacy stocks. The first company on our radar today is the Ebos Group. This ASX-listed diversified company is a wholesaler, marketer and distributor of healthcare, pharmaceutical and medical products across Australasia. The company is also an animal care brand owner, a product marketer and distributor. The Ebos Group recently announced that the company has completed the acquisition of Australian-based Sentry Medical and expanded its business further into medical consumables. The company believes Sentry Medical will further bolster its presence in the distribution of medical consumables to the institutional healthcare market, which is a flourishing business for Ebos. Ebos has completed 4 acquisitions over the last year and represents a continuation of the company's strategy of investing for development and growth. The share price of the Ebos Group was trading at $34.30 during mid-market trade this afternoon. Moving on now to the next company, ASX-listed Probiotech is a manufacturer, packer and distributor of several prescription and over-the-counter medicines, complementary medicines, consumer health products, as well as fast-moving consumer goods. The company has 6 manufacturing facilities across Australia and is engaged in the distribution of its products both domestically and globally. In financial year 2021, the company achieved strong performance. That's despite the COVID-19 headwinds, supported by strong revenue and earnings growth. The financial and operational highlights from the financial year 2021 are underlying revenue rose by 12% to $120.5 million during that period. The company, however, recorded net profit after tax of $9.1 million, up 17%. Meanwhile, the multi-pack 𝐿JM acquisition has performed significantly better under Probiotech's control. Probiotech recently completed the acquisition of H&H Packaging. The company has declared 3 cents of the final dividend to be paid on the 8th of October. Probiotech anticipates that its cough, cold and flu-related products will recover progressively in financial year 2022 and more fully in financial year 2023. Meanwhile, Probiotech will also execute its consolidation project during financial year 2022 and 2023, with synergy starting from the beginning of financial year 2024. The company will also focus on further acquisitions. The share price of Probiotech was trading at $2.14 during mid-market trade this afternoon. Now it's time for a very short break, but stay tuned to 𝐾𝐤𝐴 TV. I'll be back soon.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐾𝐤𝐴 TV.
Hello and welcome back. It's Rachel here on 𝐾𝐤𝐴 TV and we're exploring 4 ASX-listed pharmacy stocks. The next company on our list today is Sigma Healthcare. ASX-listed Sigma is a leading pharmaceutical product manufacturer and marketer, as well as the most efficient pharmaceutical wholesaler across Australia with over 1,200 independent and branded stores. It's the largest pharmacy network across Australia. Recently, software development and technology company Coram disclosed the extension of its head office suite of products with whole life pharmacies. That's Sigma Healthcare's brand plans member. For more than 10 years, 𝐸𝐸𝐴 has been providing head office software to discount drugstores, a Sigma Group member, and this extension is another step for 𝐸𝐸𝐴 to work closely with Sigma Networks. Sigma Healthcare will release its half-year results for the period ending 31st of July on the 21st of September. The share price of Sigma Healthcare was trading at 64 cents during the mid-market trade this afternoon. Next company on our list is Australian Pharmaceutical Industries. The ASX-listed health and beauty player is the biggest wholesale distributor of pharmaceutical as well as allied products. The company is involved in pharmaceutical manufacturing, distribution and retailing. On the acquisition front, the Australian Pharmaceutical Industries announced that the company had obtained an indicative non-binding proposal from Wesfarmers to acquire 100% of the shares at a cash consideration of $1.38 per share. This proposal was later rejected by the board of Australian Pharmaceutical Industries, though. Recently, Australian Pharmaceutical Industries received a revised non-binding indicative proposal from Wesfarmers for the acquisition of 100% of its shares for a cash consideration of $1.55. They have entered into a process deed under which Wesfarmers has been granted to undertake exclusive confirmatory due diligence until the 16th of October this year. That's to facilitate a binding offer. The share price of Australian Pharmaceutical Industries was trading at $1.47 during the mid-market trade this afternoon. With that, it's time to wrap up today's show. I hope you found that informative. Stay tuned for more news and live updates on 𝐊𝐶𝐴 TV. This is Rachel signing off for now.